Okay, so I'm just going to open up Chapter 2 homework. My numbers will be different than yours because you all have different numbers, but the process is the same. Let me look at one.
You're in the practice homework. I'm in the homework.
Let me see what we have. Let's look at this one. So I'm going to go to number 7, exercise 2-9, and just look at a few select transactions here. Ones that kind of trip students up. So your homework will probably be the same journal entries, they'll just be different numbers. So you kind of go along and do it with me. Again, so journalizing, this one's given, this is kind of more the format you'll see on the test, okay, where you'll see kind of what we call a guided problem. So you'll see drop downs and everything. I think that helps you remember that you have to put a debit and a credit in. Just remember, it doesn't matter, though, you always list your debit first. You will be counted off points if you flip it. So always list your debit first.
And there's always 2 added.
Yes, it's always at least 1 debit and 1 credit. So you should have 2 lines, at least 2 lines on every transaction. And these are all simple journal entries where you just have 1 debit and 1 credit. Okay. So number 1 is a billed customers for fees earned. So what do I debit and credit if I billed customers for fees earned? Accounts receivable, good. And fees earned, that one kind of gave it to us, right? Which one do I debit? Yeah, accounts receivable. So on that first one, if we billed customers for fees earned, that means we perform services, we earned revenue, and then we billed them, we invoiced them, so they're going to pay us later. So it's affecting accounts receivable, and that's increasing, right? Because they owe us money. Accounts receivable is what type of account? It's an asset, good. So if the asset accounts receivable is increasing, we know we need to debit it. So I'm going to debit accounts receivable, 46,000. There we go. And then fees earned as our revenue account. Well, fees earned as a revenue account, it increases equity. So it increases on the credit side. So we'll credit fees earned. So we debit accounts receivable and credit fees earned. Okay. Number 2, we purchase supplies on account. What accounts are being affected there?
Supplies, payable.
Very good. Yeah, supplies and accounts payable. What type of account is supplies? It's an asset. Yeah. That one's a tricky one sometimes, right? So when we first purchase supplies, it's always an asset, right? So is it increasing or decreasing? Yes, very good. Yeah, it's a debit, right? Because the asset supplies is increasing. So we're going to debit supplies and credit accounts payable. Accounts payable is what type of account? A liability. Very good. Okay, so accounts payable is a liability. It's a debt that we owe. So accounts payable increases on the credit side. So we debit supplies and credit accounts payable. Okay. Sometimes those are 2 of the trickier ones. And it depends on how it reads, right? Sometimes the verbiage, because number 1 could have said we billed customers for services performed.
Then it comes back into your pocket.
It's like, what is it? Yeah, purchased, you actually are, on that one, eventually we're going to have to pay that though. So cash will be going down when we pay that bill. So you're right, when you see purchased, that does mean money is eventually either, if it says purchased and there was no on account, then we would know it was cash, right? It would say paid cash or paid for supplies. So when we pay that debt, then our cash does go down. So you're on the right track. Purchasing does mean that, you know, cash eventually is going to go down. In this case, we just are going to pay later. Number 3, we received cash from customers on account. So what accounts are being affected there?
Accounts receivable.
Cash from your customers.
Oh, cash and fees receivable.
Yeah, cash and accounts receivable. So this one is a little tricky, and that's why I kind of chose it, because you're receiving cash from customers on account. When you see on account that you receive cash, well, we know when we see receive cash, cash is doing what? Going up, right? Because we received it. So that's easy. We know we need to debit cash. But since it says from customers on account, that means they're paying towards what they owe us.
But so it's not actually a service, right? So that's
Right.
not-
Yeah,
It's
so
the same thing.
we already billed them previously and we recognize that revenue. Now they're paying us. So when you
She
see
just said it's
received
probably gonna be the
cash
same thing, just different numbers.
from customers on account,
Oh,
it's always going to be a cash increase. And then accounts receivable is going down because they're paying towards what they owe us. Okay. So in that one, cash goes up and accounts receivable goes down. Was that 43,240 for me? Okay. And then paid creditors on account. I think you were ahead on that one. So now we're paying what we owed. We're paying towards a debt we have. So what accounts are being affected? Yeah, cash and accounts payable. Well, is cash increasing or decreasing? Decreasing. Good. So would I debit or credit? Credit. Perfect. So I'm going to credit cash, which obviously then I have to debit accounts payable. 1,200. So I still list that debit first. 1,200 debit to accounts payable and a credit to cash. Okay. So my biggest suggestion when you're analyzing transactions is to take it step by step. You know, just like we kind of broke it down there. Figure out what accounts are being affected and how. Because if you really step through it and you're like, okay, I paid cash, right? Well, cash is decreasing. You look on your sheet, we know that's a credit, okay? And then you just have to figure out the debit. If you can figure out one half of it, you know for certain, and it says paid cash, that cash is a credit, then you just have to figure out your debit account. So I think the biggest pitfall I see with students is that they try to rush through it. You know, so go back to chapter 1 when we were sitting there going, okay, was it increasing or decreasing? What accounts are being affected? If you can identify what 2 accounts are being affected and whether they're increasing or decreasing, then you know you can just use that sheet and figure out if it's a debit or credit. Okay. Then it just tells you putting them in the little T accounts. So like for number 1, we had a debit to accounts receivable. Well, I would just scroll down. I don't know why these are out of order, but I would actually show that debit to accounts receivable. Yeah, I like it when they list them like in chart of account order, which is how it should be. But you know, okay. So when we're posting to T accounts, out here you're always just putting the transaction number, and then I put like that debit to accounts receivable, and that was a credit to fees earned. I think it was 46,000. Yeah. And then for supplies, I debited supplies 1980, and that was transaction 2. And that was a credit to accounts payable. So credit on number 2 to accounts payable. 3, I debited cash 43,240. 40 debit to cash, and that was a credit to accounts receivable 43,240. That's number 3. And then number 4, I paid cash. I credited cash 1,200 and debited accounts payable. Okay. So these are pretty simple examples. You know, we only had 4 journal entries, but it's kind of a good thing when we're looking at this to talk about like the T account. Okay. So again, on a T account, you always have the account title cash, and then left is debit, right is credit. Well, for cash, we know the left side is the increasing side, the debit side. So to balance a T account, what would I do? What is my cash balance? Or how would I calculate my cash balance? Yeah, exactly. I'm going to take my 43,240 minus the 1,200 credit. Okay, so what would that be, like 4240? Yeah. Trying to, too many like numbers in there. So that would be a debit balance though, right? Cash would have a debit balance. Okay. So just remember that when you're doing your project, you're doing your ledger and the homework, when you do running balances, like cash should always have a running debit balance. Okay. So to balance an account, you just always take the big number minus the smaller number. Of course, we could have multiple numbers, but cash should have a debit balance. Okay. And then with accounts payable, it'd be the opposite, right? We take our credit. Accounts payable usually has a credit balance. So we take 1980 minus 1200. Accounts payable would have a credit balance of 780. Okay. And those are the balances that would then transfer over to your trial balance. Okay. Let's see. What's this one? I know you have the bigger ones. What's this one? Like the very last one is a big problem, isn't it? Let's see. Okay, so this one is a really good review for the test. You know, you won't have one like this, you won't have one this long, but just knowing, you know, if you can get through that problem, you can journalize, post, and do your trial balance. It's really helpful because here you actually have, it's almost like your project. You have several transactions that you're going to practice, but you're doing them on the journal, okay? So again, on the test, you won't have to do the journal, but let's do one or two together just to kind of get that actual journal form down, okay? So it says on November 1st, Chris Lehman established an interior decorating business, Modern Designs. Did you have questions?
Is this Robert 6?
Oh, yeah, sorry. It is. It's the very last one. So actually 10, the PR 2-03. Yeah, sorry about that. She established an interior designing or decorating business, Modern Designs. During the month, Chris completed the following transactions. So we're given a list of transactions that we're going to journalize. And then we have a page 2 down here as well. So it's one whole month's worth of transactions. Well, let's do the first couple together. November 1st, Chris transferred cash from a personal bank account to an account to be used for the business in exchange for common stock, $27,500. So what two accounts are being affected there? Good. And common stock. Good. Yeah, cash and common stock. Well, cash is doing what? Increasing or decreasing? It's actually increasing. Okay, she, or I'm assuming it's a she, he or she, is putting money into the business. So from the business's standpoint, the cash is coming in. So it's increasing, okay, for common stock. So she's getting common stock in exchange for cash, but the cash is going into the business, okay? So on that one, let's see, that was November 1st, wasn't it? November 1st, we'll do cash first and a debit of, what was it, 27,500, I think. I don't remember, yeah. Okay, so on my journal, when I have a free journal form, you can put the date. Usually you could do like 11-1 and it'll format it for you. November 1, I type cash and I put my debit amount. And then on line 2, I would want to type common stock and put that as my credit. So again, when you're journalizing, make sure you list your debit first. You put your date on the first line with the debit. You debit cash and credit common stock. It'll format the numbers and like indent for you, so you don't have to type in commas or dollar signs or anything. Okay, so cash and common stock. So that is when you're free form journalizing. Let's do the second one too. Also on November 1st, paid rent for the period of November 1 to the end of the month, $3,600. So if we paid rent for the month, $3,600, what accounts do you think are being affected there? And if I'm not sure, I can always pull up that chart of accounts to see what accounts I actually have. So these are the accounts when you're journalizing, you want to use these accounts. So if I paid rent for the month, what accounts? Rent expense. Perfect. Yeah, rent expense is going up and cash is going down. So which one do I debit?
Debit.
Rent expense. Yeah, very good. So remember, expenses all increase on the debit side. So when I do that next one, it's also November 1. Rent expense is getting debited. And I already forgot for how much. 3,600 for me.
It's showing that when we put rent expense, our equity goes up, wouldn't it be our liability?
Actually, expenses are equity
Went
accounts.
down.
Yeah, and it should go down.
Oh, yeah.
Let's see. Yeah. Remember, yeah, all expenses are decreasing equity, so they're equity accounts.
Okay.
Yeah. Expenses and dividends both decrease equity, and then revenues and common stock increase equity. Yeah. So the rent that will actually show rent expenses
Why
decreasing
exactly
equity.
does rent expense decrease the equity rather than, I'm just trying to figure this out.
Oh, sure. Yeah, absolutely. When we look at our equity, think of it kind of like the net worth of the business. So it kind of holds, it's like basically the stockholders' claims to the business. So equity is like all the money that is coming in versus all the money that's going out.
Okay.
So anytime, we earn money, revenue is increasing equity. Or if we sell stock, that's an increased equity because it's increasing the value of our company. And then paying out expenses and dividends decreases.
So any money that comes in would increase your equity, any money that leaves would decrease your equity.
Pretty much. That's where it gets a little confusing because if we're like paying a debt, debts are liabilities.
Right.
But any just paying like an
That's where the
expense.
differentiation would come in, at least in my mind, is that one is paying debt, the other one is just sending money out.
Yes. Yeah. Anytime you're just paying a bill or paying for something, yes, that affects your
Expense
equity.
decreases the equity.
Uh-huh. Yeah. Expenses decrease your equity. So yeah, rent expenses debited and cash is credited. So you would just keep journalizing like that. This one is kind of long, I know. So I'm going to pull up the ledger real quick too. Pop those instructions away, just to kind of remind you on how to do a ledger. So let's post this first journal entry to the ledger. So here I increased cash. I debited cash 27,500, and I increased credited common stock 27,500. So to post that to the ledger, well, I'm going to click the little arrow next to cash so I can see my cash ledger. And again, I'm going to start with the date, November 1. You don't have to put anything under item in the ledger. And I'm just going to show that 27,500 debit. 27,500 debit. And then my current balance is also a 27,500 debit because I don't have any other transactions in there yet. The post reference is the last thing we do. Well, I take that off of my journal page, which we're on journal page 1. So my post reference in my ledger would just be a number 1 for journal page 1. So journal page 1. And I would put that, let me see, just make it smaller so I can see everything. My cash account number is 11. So in my journal, under that post reference, I would put 11 next to cash. That's the account number. So in our journal, our post reference is the account number from the ledger. So as I post to the ledger, I'm going to put in those post references. And then I would do the same for common stock. I would scroll down until I found common stock. November 1. Post reference is journal page 1. A credit of 27,500. And then it has a balance of $27,500, a credit balance. As you can see, that's going to be the only journal entry we have for common stock because they only gave us one line.
So, our ledger. So we've got our cash done, right?
Uh-huh.
And so the next one in our ledger would be common stock. So we would go to the common stock page
Yes.
and credit it on the common stock ledger.
Uh-huh. Yep.
Okay.
You got it. And then common stock is account 31. So I would just make sure and put that in as my post reference on my journal. Okay, so this one's really good practice because you're journalizing pretty much all the different journal entries you'll see and then posting them to the ledger. Okay. Let's go ahead and post the second one just so you can see how to balance, to do the balance in the ledger a little bit. So on the second entry, we increased rent expense $3,600. So again, I'd go down to my ledger, just scroll over, rent expense, still November 1st, still journal page 1, and I put my debit amount in, and it has a debit balance. Again, obviously, we only have one transaction affecting rent. So debit at $3,600 and a balance at $3,600. Account number 53. So on my post reference, I put in my 53. And then cash was credited 36. So I'd come down and go to my cash ledger. On line 2, the date's still November 1st. Post reference is still journal page 1. But here we credited $3,600, right? So we credited $3,600. Let me scroll over. Okay, so I had a debit and now I have a credit. So for my cash, for that balance, I need to calculate my new cash balance. So I'm just going to subtract, right? I would take my $27,500 minus the $3,600 credit, okay? To get a new balance, which would be what, 23,900? All right. I think that's right. Trying to subtract in my head. Some days it works better than others. So I take my debit minus my credit. If this had been a debit, I would add to get a new balance. But notice in my balance column, you should always have a running debit balance in cash or all of your assets, okay? I just get my new balance. And then last but not least, I would put my post reference account 11 next to that entry. Okay. Once you are all finished doing, all the posting and everything, you'll have an ending cash balance. You'll have an ending balance for every account that had a journal entry. Okay, at that point, that's when you'll do that unadjusted trial balance. So that unadjusted trial balance will be your last step. Well, they've already set it up for you, so they didn't make you set it up. But it always is in like chart of account order. Okay, so we would just go off of our ledger. We would list all of our accounts, and then we would put in their ending balances.
So if the balance was negative, you would put that in credit?
Yes, yeah, if by some chance cash had, and you won't see that in here, but if it did, yes, it would be a credit
And
balance.
that would be on the balance little lines, the ledger?
Yes, and you would see that, yeah, in your ledger. So you're just going to copy balances straight from your ledger. Yeah.
And then at the very bottom is the totals.
Yes. So there you're just truly going to add up like the whole debit column. And then you'll add up the whole credit column, and they should equal. Yeah. Okay. So that's kind of the whole process of Chapter 2. Understanding the chart of accounts, using that to journalize, post to the ledger, keep those running balances, and then doing that chart of account, or not chart of account, trial balance. Okay. So that last problem will really help you if you kind of go through that. Make sure you do it. it'll really help you on the test. Because really, if you understand all of that whole process, then you should be sitting pretty good. Does that help some?
Yes.
Okay, good, good. Chapter 2 is really important. So I like, like that you guys ask for extra help and we can go back over it. My 11 o'clock class just sits and stares at me. I'm like, I know you'll have questions. Do it. No, it's a big class. It's like 26 students.
I didn't notice that. There aren't any, but you-
Yeah, I'm the only girl. Right? But yeah, I don't know why they just stare at me. So I'm like, they either have it or they don't have it. I'm like, I don't know. Like I asked a question and they didn't answer me, and I'm like, it's not a hypothetical. Like, and they didn't even laugh. I'm like, man, come on, throw me a pity laugh.
My other professor was like, at least shake your head.
Right? Yeah, like, yes. Like, I need some kind of feedback.